Good morning, everybody, and welcome to Ask the Accountant, episode 192. And I am not joined by my usual co host today. Aaron is recovering from a long weekend at Silverstone F1, followed by, I believe he stayed up to watch the football as well. Um, so today I am joined by the legend of Guernsey, Tim. Tim, how are you? And how's your week
Morning.
been?
I'm glorious. It's hot and sunny in Guernsey. I didn't stay up to watch the football because, as most of you probably know, I can only think of about two things more boring than football. But yeah, good week. Very busy. Not so warm and sunny last week. Weather's coming back around now. We'll get the weather chat out of the way early, I think, because it's important. It's what everyone tunes in for after all.
That's what we're all here for,
Um,
right?
you see, like, we talk about the weather and then you see like live viewers drop off immediately. So yeah, it was very foggy this morning. Currently just looking out the window and there's so much haze on the water that Sark and Herm are invisible. So we've lost a couple of islands overnight, but maybe they'll reappear. Who knows? How's your
Well,
week been?
I'm in London today. So I'm in London
Sam?
for the whole week for various events. Um, it's blue skies and sunny out there. It's a bit warm, if I'm honest. So yeah, apologies for the dodgy lighting in here. It's not fantastic. I've got an orange glow from the dodgy lighting in here.
Orange
But
glow,
yes,
no unicorns. It's terrible.
it's just falling apart, quite frankly. Um, but as always, we are nothing if we're not here for our viewers. So as of 8:30, they were streaming in. So here we go. Let's have a say hello to our viewers. We've got Cheryl saying, "What a fantastic morning it is. Could be cooler, but it's beautiful." Kirsty says, "Good morning, everyone. I watched way more sport in the last 17 hours, GP and football, than I'm used to. Sunny in my bit in Cambridgeshire." Kirsty's now saying stop saying sunny in March because it confuses everyone with the month and the location, and so yeah, makes life a lot easier for all of our viewers. Uh,
Terrible.
more to more to bookkeeping says good morning everyone. Another hot one. It is. Paul Whitehouse says morning all. Dave Mahal says good morning all. Hope you all had a nice weekend. Susanna says morning. Lisa says morning. I'll tell you what, we've got a right crowd today. Aaron can not turn up
Everyone
in
must have
future.
heard I was on.
Yeah,
What can I say?
the word got out. Paul Ingram says good morning from Southern England. Amy Hancock says morning. Kirsty says yay, it's Tim. Um, and Sue Bean says, and welcome to FCPO 10, episode 132. And I'm not joined in my usual co-host today. Aaron is recovering. Good.
Sue Green has some sort of AI watching this video,
Something's
clearly.
going on. Paul Ingram says, sorry I missed the live last week, was on a cruise. It's all is forgiven, Paul. We're all allowed a holiday every now and then. I hope the cruise was nice. And Sue Green says, good morning. Good morning, Sue. Yeah, no, I didn't stay up to watch the football. I, like you, Tim, can't think of anything worse. I very much believe if the police have to have riot gear on standby for a sport, regardless of the outcome, whether they win or lose, then actually there's a bigger problem in that sport than how they play the sport.
Yeah. Gets a bit fighty from time to time.
You know, you don't get that in rugby or tennis or golf or anything else, just the football. And
You know what, in
it
ice
upsets me.
hockey, all the scrapping happens on the ice instead of outside afterwards.
Exactly.
So kind of best of
Like the
both worlds.
rugby.
Some people want the violence, but let's keep it in the little aquarium where it should be.
Yeah, it's like the rugby. They kick each other to death on the field, and then they put a blazer on and go for a pint and some dinner. Very, very civilized.
Maybe what we need in football is just more scraps on the field. We need Vinnie Jones back, right, for a bit of a punch up during the game, and then maybe there won't be. I don't know, but apparently all you need to quell that is a decent thunderstorm. I heard, so maybe that's the answer.
Maybe. Right. Well, before we get too deep into the ethics and morals of football. We've got some news to go through today. So um, we are in the first 6 days, so we're in the first week still of the first MTD IT filing period. Exciting, isn't it?
It's
But
literally thrilling for everyone concerned.
But in being in that first week, we started to find some niggles in some softwares, primarily one. And I'm so pleased Aaron's not here to defend this monstrosity of a process that QuickBooks have invented. So, Tim, tell me if this sounds familiar. Let's say we're doing a VAT return, we're in QuickBooks, we're doing a VAT return, we might export a report, put it into our practice management tool, send it off for
Yeah,
e-signing. So client e-signs it, you go back into QuickBooks and you press submit, yeah? Or
sounds
in
simple.
Sage. Yeah, so would you expect that to be the same process for MTD IT? Is that how you built your process?
You'd think that they would follow roughly the same process as every other type of submission that already exists, right?
Yeah. So in Sage, you guys are doing the work in Sage, you're exporting a report, getting
Yeah,
it authorized by the client, going back into Sage and pressing submit, yeah?
exactly.
Yes. QuickBooks doesn't trust us as users to do it that way. So even though you've taken that report and got it authorized somewhere else by the client, QuickBooks won't let you press submit until it's sent an email to your client saying your accountant or bookkeeper wants to submit this MTD thing. Do you authorize them to submit it? And you can't press submit on the tax return until they've authorized via the email they've been sent.
Which isn't ideal, is it? I mean, look, we, as you all know, have no MTD clients because of being in Guernsey, and actually we have had a few inquiries about self-assessment from the UK, and we've said no, thank you. But if your clients are anything like most of ours, they don't actually log into their software ever, right? They can.
Nope.
They've got a username, they've got a password, they've been set up, they've been taught how to log in, but they don't, because we do all that work for them. And that includes any submissions, so like VAT submissions. And one of our UK clients a few weeks ago said, look, I'm really starting to get like cheesed off with QuickBooks. Do you care if I move you to Sage? And his response was, I don't care what software you use, I'm never going to look at it. Right? So to then make them log in, review a set of reports that they probably don't understand, and have them authorize it for submission, what is it that QuickBooks don't trust you guys to do? Like, why do they suddenly not trust you? They trust you to do VAT submissions. They trust you to do, if you're using QuickBooks to your year-end stuff, they trust you to do CT600s. They trust you to do RTI submissions for payroll. Why is this different?
Yep. And why do they ever think that clients ever read emails from QuickBooks? Most of my clients have QuickBooks auto diverted into the spam box
I
because they
think it
get so
goes there. I
many.
think that's the default on all email services, right? That anything from Intuit.
Intuit spam. Paul says in the comments, HMRC said at Accountex you don't need authorization for submission, just initial permission. Paul, HMRC don't need authorization, but your insurance provider and governing body probably do. So whilst HMRC aren't making it a requirement for you to get a permission to file each return, if the client then disputes it at a later point, I'm not sure why they would until the consultation for quarterly payments comes into place and then is ignored all the feedback we give them and they still go ahead. But if you file a tax with any information to the authorities and the client disputes it at a later point and you didn't have authorization to file it, your insurance provider may not cover you for the claim. So regardless of what HMRC think they do and don't need, we need to look at the whole picture as an accounting bookkeeping firm, make sure we're covered. So it's great HMRC aren't saying you've got to get it e-signed, but your insurance provider, I pretty much guarantee you will expect it to be. Like in my firm, we send payroll out for e-signing, VAT out for e-sign, anything we're filing, we get it e-signed by the client.
And even if there's, oh, you think you've read your insurance and it doesn't matter, or your governing body doesn't require it, or whatever it is, isn't it just best practice? Because we've all sadly at some point been in that situation where a client has said, oh my god, this is awful, why have you submitted this, now I have all this to pay, I never approved this. And you can go, yes you did, right?
Yeah.
Because unfortunately, because we work in an industry where we actually affect people's financial position sometimes by processing or not processing the right things at the right time, you need to be able to cover yourself, right? Because if it does ever end in a dispute, we all hope that we're never gonna end up in like a review or arbitration or court or something against the client. And most of us, hopefully so far, touch wood, have not. But what if you do? So you have to cover that eventuality. You have to be able to say, here's your signature, well, here's the the e-signing, like the audit trail, you did sign it, I submitted it because you approved it.
Yeah, exactly. Yeah. So whilst HMRC don't want permissions, authorization each time, everyone else certainly does. So Paul, I wouldn't follow just HMRC's word on this one. So
But
yeah,
that said, it's your choice how you get that authorization, right? As a practice,
yes,
you choose the best method for you and your clients. So some people are going to use their practice management software and get it e-signed. Some are going to send it by WhatsApp and take a screenshot of the reply
yeah,
coming back saying, please file it. Some are going to, if you live in the past, you might print it and get them to sign it with a pen. It doesn't matter what that method of approval is, but you need a method of approval. But for QuickBooks to then say, you have to use our method of approval, what's that achieving? Why is that good for QuickBooks? Why is it good for the client? And why is it good for us? It's not for any of the three.
yeah. And I think the most frustrating part about all of this is it wasn't in any of the training, it wasn't in any of the recertification process. There was no mention of this approval step anywhere.
Right. So then suddenly you've maybe got clients who have never, ever, ever logged into QuickBooks, who you're going to have to basically call them up and be like, look, I've sent you an invite to QuickBooks. Can you set up a password and log in? And then they try and set up a password. Then it tries to text them a 2FA code, which takes 5 or 6 attempts and never arrives. And then they get 7 in a row. So they don't know which one to use. And then they finally get logged in. And then you have to say, no, click here. Oh, no, wait, you're on the new layout. You click here and then do this. And it's going to take like 3 hours just to get someone to click a button that says, yeah, cool. And then the client's still, judging by a lot of the comments that I've seen recently, are still not actually going to understand what's going on or what they're approving.
Yeah. It sounds like you need counselling because of the trauma you've had with QuickBooks at some point in your life. But you're right. And the thing is, this is reminding clients that they've got QuickBooks. You've got clients that never go into QuickBooks, and suddenly they're reminded, oh, I've got QuickBooks. And they start looking around and they start asking questions and they start changing things. It's a dangerous gateway, that one. So yeah, the Kirsty said, I remember working with them to do that, but it was optional and didn't work. Yeah, it doesn't look optional now, Kirsty.
That's another thing. Does it actually work? Have you tried it? Has anyone tried it? Because a lot of what I've seen about QuickBooks recently has been like, basically for about the last 4 weeks, every single post I've seen about QuickBooks has been, oh my God, this Go cardless problem is endless. And that's something in QuickBooks not working, right? And every single, sorry, I don't know if you can hear that. There's a seagull about 6 feet away being unbelievably noisy. So apologies for the noise. Every single post I've seen about QuickBooks recently has been about something not working. And if they're introducing a new thing that doesn't work.
Yeah. And then to compound the issue with QuickBooks is an authorization thing. QuickBooks users got an email the other day telling them that between for about 3.5 hours on the 26th of June, the system was unable to accurately assign VAT categories.
Nice.
Yeah. But unlike last time this happened, where you had to guess which clients were impacted and go through them all, they did send you a list of clients that were impacted, including clients that were not VAT registered. So yeah, that was a fun email. Thank you to Kirsty for reminding me of that in the comments.
But for the sake of balance, the mystery QuickBooks chap has made an appearance and commented with a very valid point.
At least QuickBooks has an audit trail to see the client making adjustments. #Xero hasn't.
Now that is fair. That is fair comment, because one of the things I've always, because don't forget, once upon a time in the dark medieval past, we were a QuickBooks practice, and you cannot fault QuickBooks' audit trail. It is the most comprehensive out of all of the software. Some might say too comprehensive, but if you want to find out what someone did in QuickBooks, you definitely can. And that is its one.
I have issues with the QuickBooks audit software, audit log.
Yeah.
So if I connect auto entry, apron, etc., as the administrator, every time one of my team goes into apron, for example, and publishes a document on the QuickBooks log, audit log, that's under my name.
Oh, interesting.
Because I made the original connection. So actually, there's no point of having an audit log if it's inaccurate. like false information convincing you it's real, or no information. We can't win.
You certainly can't win with MTD. No one seems to be winning with MTD. All I've seen is people complaining about it, both clients and bookkeepers and accountants. It's been a constant LinkedIn stream of woe.
Yeah, and that was woe 3 weeks ago, because LinkedIn doesn't show anything current, does it?
I don't know. See, I never have that problem, but I think it's just because we're so international, it doesn't know what to do with the algorithm, so it just gives us a chronological feed.
Oh, very nice. But yeah, right. Let me just go back to the comments quickly. Nyla says, good morning. Greg says, morning from rainy Sydney. Raining in Sydney. And we've got glorious sunshine in London.
How strange.
Yeah. Who knew it rained in Sydney? I thought it was always glorious sunshine.
Didn't have a clue.
It is in the TV shows.
It might be the first time.
Could be. Groundbreaking news. Clive Hand says, good morning, chaps. Good morning, Clive. Hope you are well. Susanna says, sounds like another case of software trying to cut out the bookkeeper or accountant and convince clients they can do it themselves. Well, there is that argument, isn't there? So well, hang on, if I'm going in to authorize this, I may as well just press file myself. What am I paying you for? Yeah.
Yeah, there is always that.
And then Suzanne says, exactly, Johan, we don't want clients being helpful in software when they don't know what they're doing. Very true. Stephanie, good morning, Steph, has said, yes, it does, in response to Aaron's audit trail question. And she agrees with Tim regarding the audit trail, but there is history and notes in Xero.
I think
this is getting... Go on.
The main issue I have with the Xero audit trail generally is that if you delete something, it's gone. So the history, the audit trail as such on a Xero document shows every single action that was taken on that document. But if you then delete that document, gone without a trace, right? Yes. And that's the issue that I have with it, is that if someone just decides, we've all seen a client just decide to delete something, like, oh, I invoiced this person 3 months ago, we had an argument, I've decided not to charge them, so I've deleted the invoice. We've all seen that sort of thing time and time again, right? And it makes sense to the client, because if they're not from a financial background at all, then, oh, I don't need this person to pay this invoice anymore, I'll delete it. That logically makes sense. Now, we know it's against the rules and that you actually should have issued a credit note, but The client doesn't know that, and why should they? And so if I can't see, hey, where did invoice 12736 go? Oh my God, they deleted it. But if I can see they deleted it, then I can reinstate it, issue a credit, do all the tidy up in the background. But if they've simply deleted it and it's just gone, what are you supposed to do in that? So do you see what I mean? That's the zero audit trail leaves a bit to be desired. But yes, it does. It isn't fair of us to say that it has no audit trail at all. It's just not a very good one.
Yeah. And now this is all getting a bit Xero QuickBooksy tick for tack here. Sue Green does point out, yes. Sue Green points out, yes, but at least Xero has a journal report. I do love in Xero the fact that I can see all the journals in one place, in drafts, published. Oh, that's just beautiful. QuickBooks still doesn't have that.
I just want one day for us to all sit down, right, and draw up a list of all our favorite things from QuickBooks. It'll be a short list: QuickBooks, Xero, and Sage, and then go back to QuickBooks, Xero, and Sage and go, if you all did all of this, our life would be perfect and we wouldn't have to have this conversation, this argument anymore. But really, that's never going to happen, sadly. So I'll just stick with so Sage. You can look at all the journals as well. That's pretty nice. in one place, which is nice. It is one of Xero's best features, and I'm glad that it exists elsewhere.
Yeah, no, it's one of my favorite. Right, it's Clive Hand says, Intuit, that's what happens when you lay off 3,000 people. Yep, that's it's never good, is it? I mean, it can't be going in the right direction, can it? 3,000 people being laid off.
It's quite a lot in one go.
Yeah. And what's that, the third time in 5 years we've had that kind of number laid off by them? Yeah. Greg says, I can confirm that Sydney winter is very wet. There we go. We've all learned something new. Thanks to our worldwide audience.
Yeah, 88.
Yeah, we now all know you don't visit Sydney in the winter unless you're Scottish.
There you go.
Then it all makes sense. It's home from home. Kirsty St. John says, oh, yes, good idea for Tim. And Stephanie says, and Free Agent also have it. They seem to listen. Free Agent do love to listen. Fantastic. Now, actually, Tim, I've got some news. Give me 2 minutes. I need to bring up a message that I received. Now, I can't tell you who sent me this. All very hush-hush. But what I can tell you is there is a question that Xero need to answer. So, Xero, HMRC listing on the HMRC website, have not included. So basically, Xero is not recognised, is the correct term, by HMRC for handling foreign property in MTD IT. However, Xero's marketing says it can handle foreign property in MTD IT.
Interesting.
So someone they saw the advert from Xero that says foreign property, yes. Checked HMRC's recognised list, because it's not an approvals list, just a recognised list, and they are not recognised for handling foreign property. So is that recognition in progress? Is it not? Does anybody know? Has anyone tried doing foreign property with MTD IT in the comments? Let us know.
Well, in the spirit of Ask the Accountant's history of impeccable segues, you could ask them when you go to XeroCon this week.
I could. I will ask them. I'll ask them in 2 days' time. Wow. Aaron is so sat. A, I agree with you on a lot of points. B, you don't like QuickBooks. And C, you're better at segues, and he's been doing it for 192 episodes.
Look at that.
Fantastic. Right, let's move on from Zero and QuickBooks though. Tim, you are known for specialising, not niching, specialising in hospitality, UK wide. And you got your little sideline with your EPOS tills, etc., all
Yeah.
that going on. So if there's anyone that can talk to us about the impact for the last couple of weeks of the VAT 5% changes, you are the man for the job. So how's it been since Rachel Reeves stood up and announced, without telling anybody that she was going to announce anything, announced this 5% for attractions, kids' meals, etc. And then we had to wait 48 hours or so for the guidance from HMRC, which didn't
was
really help.
nostalgic for everyone because it really brought back
Yeah.
memories of furlough and 2020 and everything like that, and last minute announcements.
Nostalgic's not the word I was looking for. I was thinking traumatic. But yeah, go on. Tell us how has it been? How have your clients handled it? How have you and your firm handled it?
So interestingly, we've handled it by barely doing anything because actually it's really easy. And this, so for anyone that's missed it and that doesn't know, and for people like Kirsty that are terrified of pubs, the announcement was, and it applies to some other things like attractions and things like that, but the important thing was children's meals. Okay, that's what they're really going for. Reduction in VAT from 20% to 5% for 6 weeks over the summer holidays for children's meals. The implied idea is, oh, well, all of the pubs and restaurants that have a kids menu can lower the price a little bit and people will take their kids out to eat. What will actually happen is that the majority are keeping their price exactly the same and just benefiting from paying slightly less VAT. But this really exposed...
You cynic, you.
Cynic, or just I've looked at what everyone's saying. So what I did with all of our UK clients, I asked them, I said to all of them, are you going to drop your price or are you just going to drop the VAT? And they all said, I'm not changing the price. Are you mad? The kids menu is already cheap enough. So yeah, it's I don't feel that a lot of people have lowered the price on kids menus. On the attractions side of things, so like zoos and stuff like that, that sector has kind of taken more of, oh, brilliant, we're passing on the saving, everything's lovely. But the real question is going to be, which we won't know until the end of the 6-week period really, is when you look at this summer holidays versus last summer holidays, did you sell more kids' food, right? That's the only way we're going to be able to really assess the impact. It's too early to say yet. However, what I have seen is an endless stream of whinging about how complicated it is and how terrible it is. And it's just not. Okay, so this I've been getting from both sides because I've been getting it from the bookkeeping and accounting community and I've been seeing it from the EPOS community as well. Okay, and an interesting thing to note there, because most of you watching this are only on one side of that, and I'm on both, is both sides are kind of deciding it's the other side's problem. So bookkeepers and accountants are telling pubs and restaurants and that, you're going to need to speak to your EPOS provider about the best way to do this. And EPOS providers are saying, no, the clients should be asking their accountants how to do this. And the real answer is, unless you live in the 60s and still have manual tills in your establishment, you just set up a new VAT rate and you switch all the kids' meals to have the new VAT rate. And that's it, because everything else is going to be done by, you're either going to import everything at that VAT rate, or you're going to manually journal it or create an invoice, or however it is that you're posting EPOS sales into the FMS. And by the way, as a side note, because a lot of people don't seem to actually know this, here's an if we had a little banner for like Education Corner, for those of you that don't do a lot of hospitality work but that do some, B2C retail style sales can only be aggregated daily. You cannot post one journal for the whole month. That is not compliant. You can only aggregate sales daily. Okay, that's my side note. Okay, but that's brilliant, because now all you need is one extra line in your daily journal that's your 5% rate sales. Okay, I'm not going to dig really deeply into the technical aspects of this because there's been so much misunderstanding. Oh, look at that nice banner there. There's been so much misunderstanding about
Aaron's so sad.
Aaron, there's been so much misunderstanding about this, and there's been a lot of questions as well about like advanced tickets and, you know, what happens if you sell someone a ticket now that's to be used in November. Well, that's a deposit, so treat it like any other deposit, right? All sorts of nuance and that people have been really panicking about. But my real issue here is that people are panicking and complaining and demanding that it be still, even though it's gone into effect now, there's people saying, oh, like, I don't want to do this. I think they should just charge everything at 20%. This isn't fair. This isn't fair. And what that's compounding on, moving swiftly on, is there is a campaign at the moment amongst the hospitality industry. Now, this has been rumbling in the background for a long time.
Yeah.
For those of you, again, that don't know, across most of Europe, and I'm expecting a comment from Clive any moment, across most of Europe, hospitality, so broadly meals eaten in restaurants is what we're really talking about, tends to have a lower VAT rate than the general rate. And that's because, again, across most of Europe, wholesale of food is zero rated, as it is in the UK. And therefore, the VAT charged is just a cost to the business. Okay. It's all very well saying, oh, no, you're collecting on behalf of the customer. That £12 burger is actually £10 and £2 VAT. Yeah, we know that. VAT has been around since the 70s. We know how it works. But the problem is that it's almost like a psychological thing, right? That 20%, that is just a cost to the business because everything you buy is zero rated. So you're not claiming anything back. For those of you that don't do any hospitality work, the disparity between those two boxes on the VAT return for VAT charged versus VAT reclaimed, because if you think about it, the only thing you're reclaiming your VAT on is, well, booze, okay, because that's not zero rated. But if you're a restaurant, you're only really reclaiming VAT on like your phone bill and your subscriptions and things like that. You're not reclaiming VAT on the thing that makes up like 30-40% of your cost base, which is your food ingredients. Okay, so the argument is that a lower VAT rate on restaurant meals, etc., would be beneficial. And both sides of the argument are getting really passionate about this. The hospitality side are saying we're being squeezed from all sides, we need some relief. You're just going to end up with, you're going to do basically the same as happened to the big retail consolidation during the early 2000s, when we all decided collectively in the UK, we'll just let, you know, private equity take over absolutely everything, drive all the independents out of business and have the most boring high streets in existence. That's going to happen to restaurants as well, because all the independents are going to close, because all of these things, the margins are so tight, minimum wage rises, sick pay from day one, extra maternity leave, extra paternity leave, all these things which are good and that are socially positive and that we all want, they do have an impact on those businesses disproportionately compared to a lot of other sectors. So the argument is, well, okay, cool, we're going to deal with all that. We're going to have that. We're going to pay the business rates. We're going to pay this. We need some relief on it. The aim for that is, well, let's say hospitality is going to be 10%. And as Clive is just pointing out in the comments, from the start of this month in Ireland, the rate went down from 13.5% to 9% for those type of businesses, and that people are keeping the prices the same because the idea of this is to support the businesses. Now, the counter argument to this that a lot of people are making is, and exactly as Clive has commented as well, this is just going to mean that, you know, the likes of McDonald's are going to make bigger profits. Yeah. Well, yeah, maybe. So maybe we can be a bit more clever about it. Okay, what if the VAT rate could be lower for, let's say, that there's so many ways you can do this if you're just clever about it. And one of the very few benefits of no longer being in the EU is we can now mess around with our VAT rate to our heart's content and no one can tell us that we're not allowed to. Okay, so what if we said, oh, the lower VAT rate applies, but only if you turn over less than 5 million quid a year, for example, right? What if we said the lower VAT rate applies, but only if you have fewer than 3 locations? You know, what if we did something like that? There's all sorts of things we could do. But on the other side of that, if you said, okay, so, well, yeah, McDonald's are going to make more money. Cool. But it's going to stop all the independents going bust. McDonald's making another 2 or 3 million quid a year in profit is a drop in the ocean to them. It doesn't matter. They don't care. Okay. So what if? Okay. Like, think about it creatively. And the real answer here is that reducing the prevailing VAT rate to 10% for hospitality, for fast food, for restaurant meals, for all of those things, it would be a positive impact on a business that is being squeezed and that is struggling. And don't forget also that a lot of the things that you think are chains are actually franchises. So whilst when you go and get a pizza from Domino's, you are putting money in Domino's pocket, that also could be a single independently owned franchise. So you're supporting that independent business owner as well. They've chosen to do it via a franchise route instead of their own brand. They've invested a lot of money in that. Why should they not also benefit from the VAT cut? Just because they're part of a symbol group doesn't mean that they shouldn't benefit. And that's kind of my core argument behind this. But the final thing I'll say on this is there's been a lot of, VAT experts on LinkedIn saying this will do nothing. All it will do is it will make Starbucks more money and it won't save the industry and everything's going to be terrible. Well, Ireland literally just did it. So haven't we got 3 or 6 months to sit back and watch and see what happens before we decide whether we're going to do anything? Like we've got that time. That's no time at all. But it will give us an idea. We can watch Ireland, right? There is no other country in Europe that has a more similar hospitality sector to the UK than Ireland. It's the most analogous. So let's just watch. Clive will keep us updated. We'll see what happens. We'll see if it saves a few pubs. We'll see if it saves a few cafes. And if it does, then that adds real weight behind the 10% campaign.
Yeah, absolutely. And they've got some big celebrities behind this, haven't they? Like Tom Kerry just is right behind it, and stuff. I mean, self-serving, obviously, because he's got pubs and restaurants. But definitely. If we can, with business rates and everything, because people ask me quite a lot with the mergers and acquisitions, like what industries are good to get into, what aren't. It's like, stay away from construction. It's just a sweet spot for HMRC investigations. They don't trust them. I said, don't go into hospitality. The only thing that's going down in hospitality is occupancy rates. Everything else is going up. Wages, business rates, food costs, utilities, it's all going up. They need something to help them out. So in the comments, hashtag let Tim host. Let's start a campaign, people. Get me a better host. Get me a better co-host. Paul says, we see the same issues with mobile catering services. We deal with including pizza and burger vans, wedding services, etc. Wedding services are, because you could put the word wedding in there, they're worse than tax man for robbing you.
But just to be clear for Paul's benefit as well, because I often talk about this and I'm quite vocal about it. When I say hospitality, I'm using that as a shorthand for all those businesses. So a lot of you might just think, if I say hospitality, a lot of you just think hotels. But I mean hotels, I mean pubs, I mean cafes, I mean burger vans, I mean food trucks, kiosks, like anyone that is basically selling you food and or drink. For me, that's hospitality.
Yeah. Stephanie says, I bloody love Tim on his soapbox, educational and passionate. Thank you, Tim. Aaron, you are in so much trouble. To be fair, Aaron's had 192 episodes of this to get it right. Kirsty says, yes, 100%. Let Tim host. Give that man a soapbox. Tim always manages to educate in a friendly way. And Stephanie says, Aaron who? There we go. Already forgetting Aaron. Low blow. Right. Where are we? So overall, the VAT hospitality things are non-issue. And if anything, this should be a starting point for us to prove that actually these businesses can start struggling less by dropping their VAT rate.
And if you think as an accountant or bookkeeper you're going to struggle with the administration behind that, cool. Like if you really are that concerned, I'll just have those clients, because it's not difficult, right? We already, people are saying, oh, it's complicated to manage multiple VAT rates. No, it isn't. You're already doing it. You've already got 0 rated, you've got exempt, you've got 5% on some fuel. You're already managing. And if Kirsty comments about partial exemption, I'm going to scream, but you're already managing multiple VAT rates. So why should we not have another, right? And really,
ultimately, the EPOS tills are doing this for us already. Exactly. As you said at the beginning, you add a new category, And then, but we all had to do this when Eat Out,
Eat Out to Help Out.
Eat Out to Help Out campaign was on. We had to create new buttons for discounts and stuff, right?
Yeah, exactly.
We just got on with it.
And if you had, you know, some EPOS providers are great, like, you know, the ones we work with, for example, they built in functionality to sort of semi-automate the Eat Out to Help Out changes, and that's great. But even if you use a terrible EPOS system that you bought on Amazon, you can still do it yourself in just a few seconds, right? It's not that difficult. I am going to make everyone jealous though, because so we've got the tax reform in Guernsey being debated in the next week or two in the States, and one of the GST is on the table again because it seemingly just will not die. If we do end up introducing GST, it's going to be on everything. So that's the other way of doing things, is you stop messing around with multiple rates, but you also get rid of all the exemptions. So the idea of GST is literally everything, right? So food, buy it, sell it, 3%, 5%, whatever it's going to be, no messing about. So I feel like HMRC needs to either reduce the VAT on hospitality and actually crack on with that, or they need to fundamentally reform how VAT works and just make it easier. But either way, it's not that difficult. And what I find recently is that there's been a lot of people getting very, very emotional about changes from HMRC. And yes, it is disruptive. And yes, there is a lot of change going on at the moment. And yes, we have had fundamental shifts in the way that we do our jobs year on year since 2017. But if you just get on with it and don't whinge about it and don't start with all the what ifs and what you reckon will happen, then actually it's much easier. When RTI came in, because it was before all of this, it was before we were all doing podcasts, it was before social media, really, it was before a lot of things, we all got a letter from HMRC that said, you're going to have to do RTI from this date. And that was it, right? There was consultation, there was feedback, but no one was proposing delaying things by 3 months. No one was proposing that this wouldn't work or that wouldn't work. And guess what all the payroll software did? They either said, we're going to be RTI compliant on time, or they said, we're closing. Right? So if we just did that with the likes of, if we just did that with the VAT change, if we just did that with MTD, right? If HMRC had just said, do you know what, MTD's coming in on this date, shut up, get on with it. Yeah, we could have complained about it, but we wouldn't be having all these last minute changes and delays and reconsultations of earlier consultations. It's good that we have a voice, and it's good that HMRC listen, but eventually they do need to draw a line in the sand and go, do you know what, shut up, you're doing it, like it or lump it.
Yeah, exactly. Yeah, the definition I used the other week was, it's like asking for extensions now for MTD, for example, is like being in a school classroom going, oh crap, teacher actually wanted us to hand our homework in today. We didn't actually believe you were going to ask us for the homework to be handed in. We thought you were kind of making it up. Can I have an extension, please?
Well, it's like entering awards, isn't it? The deadline always gets extended, but you still try and get your entry in before the deadline.
Speaking of which, I noticed the ICB Luca Awards deadline got extended to the end of July. Hey, there we go, ICB. I'll send you a bill in the post.
They announced it. They announced the deadline extension about an hour after Millie finished doing entries, and I strategically exited the room for a while.
It's time to leave. Someone's going to get very angry.
It wasn't. That's not fair. It wasn't too bad, but it's. The thing is, you know, it's going to get extended. Like, you just know it is, but you can't risk not. And as Stephanie pointed out, it is actually only 1 week. It's just to the end of this week. It's been extended. You can't risk the deadline being extended and not do it if you want to be in, because 1 year someone's gonna catch us out. There'll be an awards thing and they'll say, oh, the deadline is the 30th of June, and we'll all be going, that means the 7th of July, doesn't it? And then the 30th of June will come around and they'll go, entries are closed, and a load of people will go, oh no. So you had to still work to the deadline. Like, we've had our tax deadline extended in Guernsey every year for the last 6 years. We still work to the deadline, right? You don't assume it will be extended.
Yeah. Cool. Right. we've got 15 minutes left. So it's ZeroCon week. Tim, I know you're thrilled about this. I know you're so excited. You can't wait to hear about all the announcements from ZeroCon.
So excited.
I'm going to be there. It's the first ZeroCon event I've ever been to. The bit I'm the most excited about is going as an attendee. I'm not speaking. I'm not exhibiting. I'm not podcasting. I'm not press. I'm going as an attendee. I've not done that since 2021.
So
Maybe
actually, it's not the fact it's zero. It could have been anything.
any event, I'd have been happy.
Nice.
Yeah,
It's the chance to just sit and listen and be a watcher for a change.
yeah, just wander around the exhibitors and stuff like that. Very, very excited for that. Is there anything you'd like to see from Zero being announced this week at ZeroCon that would make you go, actually, that's interesting?
Bank recs.
Proper bank recs, not transaction explanations.
No, not matching bank recs. I don't know. I think there's the thing is we've all been so focused on MTD for the last what seems like 30 years now that I've kind of got fatigue, and I think that I want to see something. I don't know what it is. If this makes sense, I want to see something, a big announcement of some sort about something interesting, and that's the only qualification I'm going to give it, because recently all we've seen is two things, right? And this is from pretty much everyone. The majority of what we've seen is either we've done this acquisition or we've done something with MTD. Okay. Now, both of those are very interesting and very exciting. And there's been some really interesting acquisitions and mergers and stuff going on. And that's cool. And I'm not knocking that for a moment. But can we have something else? Right? Can Zero announce something that's actually going to revolutionize something, even if it's one really small part of the ecosystem, right? What if they're going to launch a really, really cool new payroll product, for example? I don't know. What if they're going to build into the platform the ability to upload PDF bank statements without any external data capture, whatever it is, right? So I want to see actual quality of life improvements from them, and
Absolutely.
that will make me sit up and listen to what Zero or anyone else has to say.
Yeah, and not AI marketing bump. Like everyone seems very good at the moment of going, well, this is our AI theory, this is our mythology, this is our plan for AI, and delivering sod all, or what they're delivering. It might be helpful for the end user, but it's not for us as a firm owner. Like the big hoo-ha that QuickBooks and Zero had with, we're going to plug into Claude, we're going to plug into ChatGPT. Actually, you can plug in one license. As a firm owner, that's useless to us. But as a business owner, okay, it's a conversation starter. I get it. So yeah, no, that's really interesting. I wouldn't be surprised if we do see something about document capture from Zero. Maybe, I mean, the risk is that upsets the partnerships with Dext, Auto Entry, Apron, etc. But they've got to do something with HubDoc, don't they?
HubDoc's terrible. But again, it's will it upset partnerships? Yeah, it will. But it's just Sherlocking all over again, isn't it? Why? It's very rare that I defend the big softwares against the small softwares, but with things like document capture and with things like all those sorts of external automations and that, if I was Zero, if I was QuickBooks, if I was Sage, I'd just be sat there going like, why are we literally letting all these other companies eat our lunch for us when we can just build it in and eat it ourselves, right? Why, if you were Zero, if you were QuickBooks, if you were Sage, why would you not have done your own document capture, right? Why would you, or bought someone and integrated it, right? Why would you not do that? Okay. And we all have our favorite solution, right? We use Lightyear extensively. Other people are very fond of Apron. Auto Entry, still very good for bank statements and Excellent for like if you've got an external sales ledger process and you need to bring that in, really good for that. No one else does it really quite the same. And we've all got our favorites for various different reasons. But if, you know, in the nicest possible way, if Sage built in all of Lightyear's functionality into Sage, I would cancel my Lightyear account that day. Because why would I be paying someone else for it when I could be paying the same person probably slightly less money for it?
And I said this at QuickBooks Council meetings several times. Like, if you built out a proper document capture system, I would pay you for it on top of my license, as long as it worked out cheaper than the solution I'm using today.
Yeah.
So there's a monetization option for them there. I mean, if Xero launched this week document capture, and they went, look, bank statements, rental statements, we're going to charge a small amount for that, but it's comparative to the market. But we'll let you have all your purchase receipts free of charge. All of a sudden, I can see softwares getting cut off left, right, and centre. But that's also why these softwares like are diversifying. Like Apron and Dex have both got their payment solutions now and stuff. They're diversifying to protect themselves from the risk that is Xero, Sage, and QuickBooks coming along and doing the basic bits that they've been doing well for years.
Although I've just seen a comment appear where the QuickBooks chap is being nice about Xero, and apparently we have to give them some credit. So Xero has a new document capture, which is very solid. Now, I've not had a chance to play around with this yet, so I'm gonna. Xero buys HubDoc, Sage Auto Entry, purchased and forgotten, says Paul. I don't necessarily agree, Paul, because Auto Entry is... I don't know if you've seen Auto Entry and what Auto Entry does with accounts prep now, which is built on the Auto Entry platform. But for small clients and sole traders and that, it's incredible. So I don't think it's really fair that that's forgotten. HubDoc maybe,
definitely, definitely,
you know,
forgotten. But yeah, Auto Entry is a very interesting offering at the moment. And it's been well built into Sage.
I want to see more things that we can subscribe to practice-wide as well, and use that subscription across. So again, let's use Lightyear as an example. We pay for a certain number of credits per month effectively, and it doesn't matter whether we've got 2 clients or 200 clients. We can use those credits across those clients. And I want to see more of that kind of model, whereas a lot of things at the moment, you have to add it on a client-by-client basis, and for every client, it's another £12 a month or £15 a month or whatever. I want to see more practice-wide subscriptions for things like that we can use to streamline processes.
Yeah, no, definitely. No, I agree. I think quality of life improvements would get the headlines from Xeroplan, I think.
What else do you specifically want to see? Or are you just going with an open mind?
I'm just going with an open mind. Like, we're really happy with Xero as our main platform. We love working with Free Agent as well for the right clients, but my firm's pivoting in a way that those clients aren't really right for that firm anymore. But Route to Growth, that firm looks after those kind of clients, so that's fine. I think things like a proper bank statement reconciliation tool, the opportunity to consolidate our tech stack a bit would not be a bad thing. I've spent a lot of time in the last few weeks looking at Claude and Claude skills and teaching it things to help streamline my team's efficiency. Then I realized actually sometimes you have to go back to more basics. Like, I was at Route to Growth office last week, and it transpired they don't have auto-publish turned on Index for any clients.
Right.
Because of an old rule that was there before my time. But that soon changed. But yeah, like, instead of me having to go to Claude to come up with skills to make my team's life more efficient, if Xero, QuickBooks, or Sage, Free Agent were building that kind of stuff, then that would be better.
Make it more, build the efficiencies into the platform.
Exactly, yeah. So like, we've built out a work papers tool. We've built out a VAT review and checking tool. And we're building those out because at the moment we've got a different process for different softwares.
Yeah,
Whereas actually we're going to ignore all the software's features and we're going to put it into Claude. So we've got a standardized process using standardized data and a standardized outcome. So that it
yeah,
doesn't matter whether you're on QuickBooks, Free Agent, Zero, whatever, the process is now the same because of Claude.
yeah. And that's
Um,
not and to be really like, because we're doing some similar sort of different but similar stuff with Claude. And the thing that I want to underline importantly to people is that you're not necessarily building an AI agent necessarily to do stuff for you. You're using AI to help you develop a system. Okay. And
yes.
20 years ago, you could still have done this job by writing flowcharts on the whiteboard, right? And I think that at the moment there's a big like change around happening with everyone's use of AI, I think. And where the sort of smart money is using AI to help you make stuff quicker, not necessarily using AI to do the stuff quicker for you.
No. So like in our working papers tool, right? We put a trial balance in and the opening and the previous year's accounts, and it checks the opening balances.
Yeah.
And then it comes up with a list of all the supporting evidence we need to collect from the system or from our clients for all the
Yeah.
balances in the trial balance. Whereas I'd have had a team member sat there for a couple of hours going through it all, documenting all of that, and then sending that email off. I've got that down to a 5-minute exercise in Claude.
Yeah.
So
And
it's finding wins like
where
that.
it's worth it.
Yeah, absolutely. Yeah, so no, I think just quality of life improvements from Xerocon would be really good. Looking forward to going around the exhibitors and chatting to all of them, see what they're up to. So yeah,
Some of them might be like a different crowd, right? Because you're gonna have a lot of the exhibitors that we all know and love, that we see at Accountex and we see at the ICB Summit and we see at Fab and we see at DAS. But there's got to be somewhere in that room some exhibitors that you haven't met, and that's interesting, right? Because
absolutely,
maybe an opportunity there with some of them.
absolutely, yeah, yeah, definitely. We've only got a couple of minutes left, but Sage and Satago have announced a deeper partnership. What do we know, Tim?
We don't know lots yet. It's been announced. Satago have been around for obviously a long time. I don't know loads about them. They do a lot of invoice financing, and I think that anything that's helping, this is like the embedded services bit that Sage are doing, right? And this is exactly what we're talking about, quality of life improvements. And before anyone complains, we know that none of it's perfect yet. We know it's not really there yet. We know that some of it might feel a little unfinished at this stage, but we know what Sage's roadmap is. We know that the idea behind all this embedded services stuff is, as Johann and Aaron like to mention on a weekly basis, it's kind of what open banking should have done, right? And it feels a lot like Sage have it almost feels like they've got fed up of waiting for open banking to become what it should be and decided to do it themselves, basically.
Yeah.
And so look, with Satago, let's look at things like, if you are using invoice financing, right, if you still think it's 1972, then that's ideal, right? If you're a Sage user and you can pull all of that information cross-platform and not have to, because one of the most frustrating things about using invoice financing is that typically still you're having to download the PDFs of all your invoices and then upload them to the platform that the invoice financing uses, and then you maybe rekey some of the details and then wait. If that can all be embedded, and it's not even an automation,
Absolutely.
then it's level embed, then that's a massive advantage, right? Because if you're reliant on that cash flow, if you do a lot of invoice financing, you are reliant on cash flow because that's why you're doing invoice financing. And not that there's anything wrong with that. That's how a lot of businesses are structured. But if you are in that position, then that 2 or 3 days that this could speed up the process, that really might actually make a difference to the health of your business.
Oh, hugely. Like I've got clients that are getting invoice financing, and it's a bloody nightmare reconciling it. Whereas if the invoice financing tool speaks to Sage, Zero, QuickBooks, whatever, and it can post the adjustments to the control account. If it does it all for, that's going to save so much time. And all of a sudden, actually, you sat there going, well, actually, if the Cartago can do that and other providers can't, then Cartago is a more attractive thing from an admin point of view, regardless of the rates.
Because
so it's a very clever move.
We have all moved providers for something at some point because it was more convenient because it integrated with the platform that we like, right? You know, we've moved from, like, especially reporting tools are the big one, right? You know, like look at all of you zero types are all using Sift now, right? Whereas before there was a bit more of a mixture, right? But Sift integrates so deeply into Zero since that acquisition. Why would you not? Like, why would you not move to that solution? Because it makes sense. It's, again, that goes back to the previous conversation. It's a quality of life improvement. It makes life easier. It's going to reduce friction. And yeah, it's going to be the best product, even if the rates are ever so slightly higher. It's going to be worth it for the time it's going to save.
Yeah. So interesting announcement. It's one to watch, and it'll be interesting to see who else then partners up with who else to make that life even easier for everybody else. So that'd be really interesting. Right, we are over time. Tim, it has been an absolute pleasure to have you on board and have you with your soapbox today talking about VAT, hospitality and stuff. Remember, people, hashtag let Tim host. I think that was the hashtag. And if we can get that going on social media, I would expect Aaron's resignation. Right? He'll do a Keir Starmer. He'll drag it out a little while, but I think I think he'd resign eventually for the better of the podcast by bringing in Tim every week. But no, seriously, Tim, absolute pleasure to have you on board. Thank you again for all of your insight and for attending on a Monday morning. And to everyone that's been commenting, thank you so much. And we will see you all same place, same time next week with either Tim or Aaron.
Why not both?